the most urgent challenge for Walmart right now is the navigating of the impacts of tariffs. And I like that the company's management team didn't try to downplay that risk factor, didn't try to say, oh, you know what, it's not a problem, don't worry about it, we'll be fine. They didn't do that. They elaborated on just how big of a challenge it is, what the company has done to mitigate that challenge, what the business looks like going forward, and what the positives and negatives can be out of this impact and the scenarios that could play out down the line. The management team told investors, and I felt like they did a great job communicating on the impacts of tariffs and what they have in terms of control of how to mitigate those impacts of tariff.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So the CEO said the immediate challenge is obviously navigating the impacts of tariffs here in the US. He went on to say that we're hopeful that it leads to a longer-term agreement between the United States and China that would result in even lower tariffs. So they're hopeful, and in fact, the company elaborated on that. They believe that ultimately there will be deals, bilateral deals between the US and their trading partners, which lead to lower tariffs. They don't believe that these higher tariffs, or they don't believe that the reciprocal tariffs will be restored. And if that should happen, that would actually be a downside scenario for Walmart this year and beyond. And they said that to investors. They didn't try and sugarcoat it. They said, look, right now we're hopeful, right? We're optimistic that there will be a deal and we won't have these restrictive tariffs in place for very much longer. But if there isn't a deal and those Liberation Day tariff rates are reinstated, remember, they're all just paused right now. The stock market is excited and it's recovering from the lows because those tariffs were paused, but they were not canceled. So if they were to be reinstated, then there would be considerable downside, Walmart said, to their results in 2025 and beyond. Because they aren't able, they said this again repeatedly, that they aren't able to absorb all the profit pressure given the reality of how narrow retail margins are. And just to give you an insight into what the Walmart CEO is saying here about retail margins, Walmart has celebrations when their operating margin is 6%. If you remember famously, Sam Walton, the co-founder of Walmart, told his team that if we achieve a 6% operating profit margin, I'll do a dance in front of everybody. And famously, they did achieve a 6% margin, and you can go and check out that video of the CEO dancing in front of his team because they achieved a 6% profit margin, right? So 6% is cause for celebration. If 6% is cause for celebration, you can understand how narrow the profit margins are. Out of every $100 in sales that Walmart makes, it takes home less than $6 in most cases. So if Walmart has to pay a higher cost for the items that it's importing, above whatever it even achieves in terms of profit margin, then it can't absorb all of that. It has to raise the price that it charges customers if it wants to stay in business. Otherwise, the whole company might not be profitable, and it might be significantly unprofitable if it doesn't raise prices on customers. And how can you operate a business if it's unprofitable, right? If you're losing money on the bottom line, how can you survive as a business, right? Businesses don't have infinite money where they can just continue surviving when they're losing money. Temporarily, businesses can survive while losing money on the bottom line. You can do that if you can get investors to agree to give you backing, give you money until you reach profitability. But investors will only be willing to do that temporarily. And they'll keep checking in on you to see if you're making improvements, if you're continuing to shows signs that you can be profitable in the long run. Temporarily is the key word there. So if Walmart just absorbs all of these costs and doesn't pass it along to customers, they will likely be unprofitable on the bottom line, which they can sustain for a year, for 2 years, probably even 3, 4, or 5 years. But much longer than that, Walmart's whole business model would need a huge restructuring. They would need probably to close many of their retail stores, which will lead to thousands and thousands of people losing their job, and no certainty that Walmart could even be profitable if it shrinks to a smaller level and focuses more maybe on its international business. There is no certainty that it can do that, right? So the safer option for Walmart for survival, for competitive advantage, is to increase prices that it charges customers. That's really the only option Walmart would have if the tariffs are especially returned back to those reciprocal levels, the Liberation Day levels, because those levels were so high that Walmart couldn't, mitigate some of those, right? They're saying they can't absorb all the pressure, which means they can absorb some of the pressure. And that's true. They can absorb some of the pressure. Suppliers are going to see fewer orders as a result of these tariffs. So suppliers are going to be in a position where they have to accept lower prices. So Walmart can tell its suppliers, look, we're under pressure because of margins. We have to pay you 10% less than we were paying you before. Okay. So they can have some of that impact right there, just a 10% savings from supply negotiating with suppliers. And then maybe they can do better management of inventory, better delivery options, uh, better purchase decisions, buying fewer things in the categories that are most impacted by tariffs, and presenting consumers with other options that are maybe more profitable for Walmart. So, making some inventory selection decisions on the margin could also help. But in the end, there is too much for the business to absorb overall. And if the tariffs remain at high levels, they're going to need to raise prices. And then the next step becomes observing how customers respond to those higher prices. In almost every case, when a business raises prices, consumer demand decreases, right? It's called the price elasticity of demand. I teach it to every first year university student in my class when they come take economics with me. When a business raises prices, consumer demand falls for their products. That's the all else being equal. That's the force. It's inverse. And so Walmart knows that, right? They've been in business for decades and they will need to observe how consumers respond. How much fewer do people spend at Walmart as a result of higher prices? Do they even spend less at Walmart as a result of higher prices, right? Because maybe other factors offset the impacts of higher prices, right? Because I say this as, when I teach this, we teach this as all else being equal, but all else is never equal. When you impact this kind of big policy change, it changes a lot of other things as well. And so the consumer is facing this impact in several different ways. And maybe the net impact is not so negative, and they continue shopping at Walmart as much as they were before, or maybe even more. So that's what Walmart needs to find out. And as investors and as an investor, that's what I'm looking for in the next quarter when Walmart reports their results. That's the biggest thing I'm going to be looking out for, is the consumer response to these higher prices. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.